Hi, this is Jordan from Group 8, and I am presenting the changes to the balance sheet and income statement based on recommendations from the first go around. So I have up here, this is our initial starting spreadsheet here on the left, and then our finished one that we've completed today is on the right. And I'll just go through and show you the differences. So our first big change, we changed our cost of goods sold from 33% to 36%. General and administrative as a percent of sales, we lowered that from 15% to 8%. We also increased our labor by $1, so that we had in year one it was $12.56 on our original, and then on year one for our new one it was $13.66 per hour. The next set of changes that we made came from the minimum cash as a percentage of sales is what we initially had thought was going to be correct, but we changed that to a percentage of expenses, but we kept the percentage amount the same. So that was a big change there, to change it from sales to expenses. We also changed the cost. So when we changed the cost of goods sold percentage, we can see from 33% to 36%. Obviously, our cost of goods sold expense went up about $4,000, and then we can see the changes when we also lowered the percentage rate. Our general administration account went down, and then one of the biggest changes that we made was here to this depreciation expense. When we first started our spreadsheet, we didn't have it broken down by asset, and so we had just averaged the depreciation expenses based on the years, the depreciationable years. And so when we went back to redo our spreadsheet to get it more accurate, we decided that we needed to break down each asset, building, vehicle, and equipment, and then do the straight line depreciation based on that, because each of these items are depreciated at different years. So it's a more precise measurement of the depreciation expense. Then, so that was all that we ended up changing here on the expenses side. So when we get down to the balance sheet, we can see that the biggest change again was this accumulated depreciation and how we broke it down by asset here. So that was the changes to the balance sheet and income statement. And a lot of these changes, except for the accumulated depreciation and the general and administrative expenses, were made after we were trying to calculate the WAC, which will be in the next video. Thank you.